What's going on, guys? This is Brad with OTCs. I'm a little wired right now. I had a late night or late afternoon coffee. I'm a little jittery, but I'm ready to get this started. Sorry, just trying to make a little bit of light of it. Um, Serious about the coffee though. I'm a little jittery, not gonna lie. But welcome to my broadcast tonight. We're talking about orders. And maybe some of you, I know there's been a lot of new people into my channel, and so some people are, and I've gotten a lot of direct messages through my Discord, um, asking about the best way to buy a stock. What are these orders that I keep getting that keep showing up, and how do I do this? What's the best way to order, especially in the OTC? It's a little bit different than when you're ordering something that has a lot of liquidity, maybe not quite so volatile and that sort of thing. So that's what we're going to be talking about tonight. And so, yeah, just watching some people tune in here. Welcome, Sherry. Welcome, Jesse. For those of you who are new to my channel, welcome. I appreciate you tuning in this evening. And I hope you stick around, especially if you are unaware of the benefits of limit and market orders. So a couple things. If you're new to the channel, I do have links in the description to join my Discord chat group. You're more than welcome to take a gander at that and join us like-minded individuals who are finding success trading over-the-counter stocks, as well as other penny stocks too. Yeah, so let's get started. So what are market orders? So some of you who maybe still be paper trading or maybe our regular trading just didn't realize there was other orders out there, other types of orders. We'll just go over the market order and the limit order. So the market order, the best way that I can describe a market order is, I'm a Marylander. So I live in Maryland and we're big about crabs. The blue crab is something that we always pig out on in the summertime, sometimes in the winter, but they're not from Maryland if you get them in the wintertime. But anyway, crabs. So when you go to buy like a bushel of crabs, or even if you're buying a dozen crabs, you're not buying it at any set price. There's always a market price. There's always a different price every day based off of, scarcity or, it's supply and demand basically. So if there's a bigger supply of crabs and, your typical crab shack or your crabbers trying to get rid of them, they will set it at a lower price so that they can get rid of it quicker. Or likewise, or on the flip side of that, if it's more scarce, they will raise the price because they're trying to make up for that scarcity. And so same type of concept. When you're using a market order, you don't care necessarily what price you're getting in at. You just want shares of this stock and you just want to get in. And that may help you if you're trading a stock that's really liquid and it's running. Say if you get into something, you see a ton of volume come in and it's super liquid and you don't even care. You just want X amount of shares of this, and whatever price you get is whatever price you get. Maybe that helps you if, like, let's just say, for example, a stock's trading at $100 and you see potential for it to go to 150 with whatever maybe catalyst that came out and all the volume that's pouring in on it. And you see it's going to run to 150 and you're like, I don't care, if I get in at 110 or I get it, even if it's trading at 100 right now, I just want to get shares of it because I know it's going to run and I don't want to miss out on it. Maybe that's the strategy for you, but for the most part, especially with over-the-counter stocks, because they're so volatile and the liquidity probably isn't always there, market orders are going to probably hinder you more than help you. So that's why I always find success and tell people to buy at a limit order, because a limit order enables you to say, I'm not going to buy this stock for any more or any less than this price. So say you want to buy a stock at a penny, and whether or not it runs past a penny or whatever, maybe it drops below a penny and then you can get filled in at that penny price. You know that you're not going to buy that stock for any more or any less than a penny. Same thing goes for selling. And that's where market orders will also hurt you when selling. Say it starts tanking, okay? And you don't care what price you get out at. You just want to get out. You can set that market order and you can get out. But the problem with that is that with over-the-counter stocks, the spreads on these can be quite large, and the spread is the difference between the bid and the ask price. So if the bid price is way down, like at a half a penny, and even the ask price can be at over a penny, and that happens, and the most available price is at a half a penny, you're going to sell at a half a penny, and that's a huge difference when you're talking something that's that small, and especially if you have like a large position and you're just going to sell it all at that price. Now, the advantage to that is that you're going to get rid of your shares quicker. That order is going to fill quicker. But at the limit with setting a limit order, you're basically guaranteeing yourself that if it gets filled, it's going to get filled at that price. And you could always change around that limit order, obviously. If you're not feeling like maybe that limit order is going to fill at that price, you could just always cancel it and change it. And in my experience, I haven't had much of an issue with getting filled as long as because I look for stocks that have a reasonable amount of liquidity. And so that is, in my opinion, the best way to go about doing it is to get in on the limit order and not a market order. I hope that clears that up as far as like why and how I choose limit orders versus market orders. Again, it all just basically depends on your strategy. But when it comes to over-the-counter stocks, limit order, I think, is just going to be your best friend, especially if you're just starting out trading, because market orders can really mess you up and get you real confused as to why you got in at a price way higher than you expected because you set that market order. And the market manipulators down here know that too. And so they will, manipulate that price so they can get, kind of, I don't want to say stick it to you, but, they're going to do whatever they can to get the best profit they can. And so, if you're setting market orders, they see that. Same thing goes for like stop losses. I don't tell anybody to use a stop loss. Keep a mental stop loss because market makers can see those stop losses as well, and they can, prey upon that, so to speak, when it comes to setting stop losses and that sort of thing. So just looking at the comments, Brad, what happens here? Yeah, I got, I've been telling you guys every time, I try to make my videos, higher quality each time. And so I got myself finally a decent pair of headphones so that I can, hear what I'm saying clear, and that I can ensure that everything's coming over the airwaves to you just fine. The earbuds weren't quite cutting it. So you guys are roasting me so bad. And somebody asked, so David said, can they see trailing stop orders? Yes, they can. So also be aware of that. They can see any type of order that you throw at them. So I always just suggest setting that limit. And I'm going to show you that in a second, how to do that. So like if you are still paper trading and you still haven't quite taken the plunge and putting some of your own skin in the game, I'm going to go ahead and show that to you. And so I have, let's see here. I have Thinkorswim pulled up. I know you guys are pretty familiar. Most of you are pretty familiar with Thinkorswim. And so I have, a trade order pulled up for Thinkorswim. And this is MSPC. This is a popular one that we've been trading here lately. And so I want you to look at the bid price and the ask price here. Now, if I was going to set a market order, I could come down here and change it to market. And so see, this price disappears. And all you're doing is that you want to set the amount of shares that you want to buy. And so it's going to get you in, you're going to fill an order at whatever price is available. Okay. For me, that's kind of scary, because what if the most available price right now, the ask is sitting at 0009, but if there isn't anything available at 0009, and then it bumps up to like, 11 or 12, and that's when it finally gets filled. I mean, that's a huge difference down here, especially, even though it seems like it's only a few ticks, that's a lot. And I'd hate to see you get caught in something like that. Likewise, if it's trending down and you want to get out of it and you set a market order, but the most available price isn't down till like 0005, and that's when you sell. I mean, you could sell potentially at a huge loss, or maybe all your profits will get wiped out because that's when the order actually fills. So you want to actually do it at a limit price. And say, for example, you're looking at the level two, and the level two is telling you that there's a huge ask wall. Um, and what I mean by that is that there's a lot of shares sitting on this ask, waiting to get filled. And you say, okay, well, it looks like it's going to struggle to get past 0009, and it could potentially come back down to 0008. And there's quite a bid support at 0008 or maybe 0007. You can set that order to 0007 or 0008, and it's not going to fill until it gets to that price. Now, you might have issues getting it filled completely at that price, only because if there's little volume, low volume, like today we had a low volume day on it. Um, you might be challenged a little bit to get it filled at that price, but you at least have the peace of mind knowing that if it comes down to that price, that it's going to fill at that price if it gets filled, and that you're not going to get screwed uh, at, at whatever price the market wants to buy your shares with at. So that's kind of it in a nutshell. I just realized I know I use nutshell a lot on all my videos, but whatever. It's like one of my favorite words. So that's the basics of buying and selling versus market and limit orders. I know that a lot of people are quite confused about that. So this is just a topic that I felt was pretty important. Um, and only because I've gotten so many questions on it, and that's what I usually try to cover. When I notice that people are asking a lot of questions about a particular topic, that's what kind of drives me to make a video on it, and share my best practices and my knowledge on it, based off of, obviously, again, my opinion. I don't, not telling you that you have to do it with limit orders or that you have to do it this way or that way. It's just I try to share my success, and I try to share my experiences, and you can do with it what you will. I've seen a lot of people have a lot of success, based off of some of my strategies, and so that's kind of like why I do this. I like to be able to help people and find success in trading, particularly over the counter stocks. I like to try to reduce the stigma, if you will, on over the counter stocks. Obviously, there's a lot of risk involved with them, but a lot of money can be made too. And so I like to try to shed some light on that. So I'm going to go ahead, and if you're new to this channel, open it up for questions. Every time I go live and I go over a specific topic, I always open it up to questions, and it can be related to the topic, or it can be, a little bit different or whatever. Maybe something happened today in the market that we want to discuss. And so I'm just going to open it up to that. I'm going to just kind of scroll back through here and see. Somebody said, say that again. Who can share your stop losses? Nobody shares your stop losses, but market makers that are, setting the price per share can see all different types of orders. So they can see trailing stop orders, they can see stop losses, that sort of thing. So like if they see that there's a stop loss set, then they can, manipulate the price to trip that stop loss. And then, because over the counter stocks are so volatile, it could drop down, trip that stop loss, and it come right back up. And you could miss out on potential profit because you set your stop loss. So I always like to say to set maybe like a mental stop loss, if you will, and do it that way. Sell when you are comfortable selling, and not just setting it at a stop loss because of the volatility that happens down here. You're going to lose more than you'll win if you set stop losses. And I think that's across the board personally, but in particular, especially with over the counter stocks. Just the volatility is just, stop losses just don't work. Just looking through here. Brad, I'll be joining you in 2 weeks with OTCs, opening my TD account. Congratulations. That's awesome. Excited for you. What's common position size, amount of shares bought when trading OTCs? It kind of depends on your own, comfort level, right? What are you comfortable losing? I always tell people that, like, are you comfortable losing $1,000? Like, is it going to kill you if you lose $1,000? And that's with any trading. I mean, I'm not talking about over the counter either. I'm just talking about trading altogether. because you can never 100% predict the market. So you have to be willing to risk whatever it is that you put into it. So for me, typically, I would say my common position size is anywhere between a $2,000 and $3,000 position. So, and that depends on price action and that sort of thing too. So sometimes and if I see price action climbing, that it means that I'll add to a position. But usually, if I'm unsure 100% one way or the other that a stock is going to run, say it's like really low trips, like maybe 0002 or something like that. I did that with MSPC when it ran a few weeks back. I got in and just got a starter position at 0002. I think that it equaled out to like 2.5 million shares. But then I noticed that there was a lot more momentum getting going on with this, and a lot more attention was on it. And so then I decided to add to that position at 0005. So then I ended up with 9.5 million shares at 0005, and then I ended up running the 0029. I think was the high for that. And so it just all depends on your strategy. But that's kind of like how I do it a lot of times. So let's see here. Going through some more questions. I was looking through a webinar, mentioned how OTCs were kind of dying off or not as prevalent. Do you notice the same? I wouldn't say that. I mean, there's still plenty of money being made. Some of the most experienced traders that I actually interact with and talk with have made more money this year than they ever have. There's obviously a lot of factors that go into that, but such as like experience and that sort of thing. But I think the OTC is alive and well. OTCmarkets.com has really started to evolve itself. And, they just put out another tweet the other day about, improving, transparency between, over the counter stocks and, its investors and that sort of thing. So I think, well, obviously there's always going to be some kind of negative connotation with over the counter stocks. I don't think they're going away anytime soon. So good question though. I do understand where you're going with that, but these other bigger investors that trade a bigger board stocks always like to talk down on over the counter stocks. And honestly, for people just starting out and people that might not have a whole lot of money to just invest, I think over the counter stocks are perfect because you can actually afford the price per shares down here. It's not, people don't have 10 grand to throw at a position and see 5 to 10% potential and say they made $500 to $1,000 a day. It just doesn't, it's just not common. While people down here who trade with us in the OTC, they can throw $1,000 at a particular stock. It can double or triple in price, and it's not uncommon to see that. And boom, they've made $2,000-$3,000 maybe within a week's time or 2 weeks time, or even that day, depending on when they got in. So for me personally, I don't think over the counter stocks are going anywhere anytime soon, and I think they're really great for people just starting out. As long as they do the work, they do their due diligence, and they're really confident in what they're doing. And really, a lot of that has to do with networking with the right people, which is why we have our chat group within Discord and with Techbuds Solutions. I really think that we have a great group of people that are willing to help others learn and succeed together. So there's my little spiel on that. Just looking through questions here, guys. You guys are really, really active tonight. What would you say is the most unpredictable about OTCs? Oh gosh. I don't even know how to answer that question. The most unpredictable. I guess there's certain things where you can do all the DD in the world. You can do all your due diligence and all the charts look great. And then for whatever reason, maybe there's a ton of shorts on it and it just drops. And there's no way for you to determine that. And that's the unfortunate and stressful part about the OTC, especially if you're getting into a stock that, has a stop sign on it. They're not current, and there's a big question mark with something like that. Obviously I wouldn't tell you to not trade something like that, but if you're just starting out and maybe you want to get into something that is actually current, actually has filings out and that sort of thing. Maybe they're uplisted to the QB or something. Maybe a company that's a little bit more credible, but that is not at all to say that you can't make money on something that has a stop sign on it or even a caveat emptor, um, because they're out there. Sometimes, they're new companies. Things happen. Accountants might leave the company, and so then they have to go out and find a new accountant to get their filings up to date or whatever else. I was just talking to a CEO the other day. His lawyer died and couldn't put out the AKs in time, and so things happen down here, especially with smaller companies that aren't like big corporations where they can just scoop up an accountant at the drop of a hat, or maybe they have a whole team of accountants. So if one drops off, it's not a big deal. You know what I mean? But these smaller companies can't afford all of that. So that is one of the challenges that you run into down here. I have trouble getting into dips too early, like I did on LIBE and ADAC. Any advice? Jordan, I would just stick with your, looking at the charts, finding that absolute bottom support. I don't know what else to tell you. Is just do some more due diligence and really study the way that the stock is reacting. Sometimes you might get stuck in something that got in a dip too early or whatever, and those things happen. Sometimes you just have to weather out the storm. And if you have done all the work and you still have faith in the company and know where it's going, then I would just stick it out. Or if you're really done with it and you don't want to waste any more time with it, then move on. There's always the next stock that's going to run. That's the beauty of the OTC. That it's so volatile that there's always something else out there that's going to show potential. And so it just depends on whether or not you either have the time for something like that or the money for something like that. So it all depends. When it seems too good to be true, is it that time to sell? Again, that's like another preference. Is it if it's chances are if it feels too good to be true, I would question it altogether. If you're in something that's run up and then you're like, I don't know, take the profit. That's what I always tell people. Just take your profits and run. Do you use stop losses? I think I covered that. No, I don't. And I would never tell anybody to use stop losses. You guys don't use stop losses. No. Alfie, let me tell you again. We don't use stop losses. It's really okay. You will survive without using stop losses, I promise. Okay. Patience is key and the worst thing to get used to. Absolutely. Can't agree with you more. Okay. Anything else, guys? Yeah, because and I'm just going to address this. Alfie's still continuing on the stop losses, why we don't use them, because the spreads are crazy. Yes, that is a huge part of it, and the volatility. So just want to reiterate that. That is why we don't use stop losses in the OTC. Always set yourself like a mental stop loss. Say, I'm not going to go below X price, and I'm going to just sell no matter how much further it drops down, or even if it drops down and goes back up. I'm going to sell at this price, especially if you're already in the green. If you've already got profit on it, set a mental stop loss and get out at that price if it drops there. And then that way you can ensure yourself at least you left with profit. And don't be kicking yourself if you missed out, because it happens to the best of us. And again, there's always going to be the next one. I promise you. You do not have to be married to these stocks whatsoever. Selling. How do you go about selling 9 million shares? So I've covered this before, but I'll go ahead and reiterate that again. Somebody said, I want crabs now. Dang it. Yeah. Tell me about it, man. It's getting warmer out for down here. Crabs are going to be moving into the bay and I'll be tearing them up. But Sharon asks, how do you go about selling 9 million shares? So again, I've covered this before, but when a stock runs up and you've got a large position like that, I always tell people to sell in chunks. So maybe I would sell that at 1 million or 2 at a time, because it might be harder to fill that 9 million share position all at once. Now, it also depends on the liquidity of the stock. how much volume's going on. It's something like MSPC where at the time it was selling, or it was showing volume of like over a billion shares every day. Probably wouldn't be too difficult to sell 9 million shares at one shot because of just all of the activity that's going on with it. Something like today, though, where we saw very little um, volume, probably be a lot harder to sell 9 million shares. So it all depends on the activity, the volume, and that sort of thing. But I always like to suggest, and this is just how I've been taught to sell in chunks as the run is happening. So there you go. April stock picks. Yep, they are coming up. I'm gonna have that probably next Monday because I still haven't gotten any millionaire requests yet, but that is still up in the air as well. I really enjoyed the interview that I had with Cameron. He and I have been talking as well since then. We were really excited about it. He knows a couple people, so I think that I might be able to have another interview or two that we could have as far as the Millionaire Mondays go. I just really enjoyed that. It was something that I personally loved talking to. I always like talking to people who found great success and finding out how they did it because everybody's journey is different, and it's just very interesting to me. And I think you guys really got a lot out of it too. There's a ton of views on that already. Broke my 24-hour record, and so I think you'll see a lot more of that. So again, if you guys know anybody who has a net worth of $1 million or more, I'll just go ahead and plug that again. Please have them reach out to me. You can put comments in this video and or reach out to me in Discord. I'd be happy to set something up with anyone that you know, or if you are a millionaire yourself, please reach out to me. I'd love to talk to you. Okay. That is all I think I'm going to have for you guys tonight. So again, I appreciate you tuning in. I hope that you learned something about limit orders and market orders and how they can benefit you when trading. And if you are first time visiting here, please go ahead and subscribe to this channel if you enjoyed yourself. And for those of you who returned, thanks. Sometimes I don't know why you do, but I do appreciate it. I really do. And if you like this video, of course, smash that like button. That is all I got for you guys tonight. I'm pretty sure. I don't think I'm missing anything. Nope. As always, guys, I'll see you before the bell. That's all I got for you. B. Smith is out.